Martin, let's start where John just left off in terms of that mobile picture. I mean, King's Candy Crush doing well, but Zynga was a real sore spot for Take-Two.
Yeah. So when you compare Zynga's very broad, diversified portfolio of mobile games to King's, the key difference is King really benefit from a very scaled audience, a very focused audience with a well-known brand. Zynga is the opposite. So when it comes to user acquisition and getting access to new users to retain a scaled audience, Zynga would run into much bigger trouble, especially in current environment where Apple's ATT is putting headwinds on everyone.
So how does that deal look now? In retrospect, is this something that Take-Two can turn around, or did they overpay for Zynga? Or are shareholders correct in not liking this deal from the beginning?
I think there will be quite a few quarters, if not a couple of years, where this deal will be perceived as a deal done at a peak multiple, given the lack of recovery on mobile user acquisition effectiveness. So the deal synergy, or the value of the deals, really comes from Zynga's ability to explore Take-Two IPs, trying to bring Rockstar and 2K's IPs into mobile and find success. And without that, that deal will be perceived very negatively among investors.
So, Martin, is this an opportunity, this environment for Unity ironSource, for example, or for AppLovin, which are trying to optimize that mobile and gaming ecosystem? Is it an opportunity or is it a liability? Do people need them more because the overall revenue is down, or is it going to just really squeeze them?
In this environment, especially for smaller developers, they need someone like AppLovin, they need someone like Unity more than ever, because they need someone who can provide end-to-end service, not just from user acquisition's point of view, but from any little things that help them to improve overall app performance, overall monetization, that will benefit them. And overall, they will need to look for a larger software providers, someone who can provide everything from monetization to user acquisition to ad automation and everything else.
Martin, you said that Zynga may be seen as a deal done at peak valuation, but when you look at Take-Two now, does it look like an attractive target to you? And who do you think it would be attractive to, a Disney or a Netflix?
If you have the discipline to hold Take-Two for the next 2 years, in other words, you will hold Take-Two until it launches GTA 6 sometime in the next few years. This is a good entry point. But in the very near term, I believe the stock will go through some turbulence because there's still very much uncertainty and negative headwinds on mobile into the first half of 2023.
Some more skepticism thrown into the mix on Activision Microsoft this week, and I just wonder, given the multiple layers of scrutiny it's undergoing on various continents, if you think that's a model for how regulators are going to view the overall space in the years ahead?
For video game particularly, not likely for other deals because Activision is so much bigger than anyone else. So if this deal doesn't go through, it doesn't really set a negative case for other potential large M&As because Activision is so much bigger, some of the key franchises so much more dominant than other games.
Opens the door for more M&A. Do you mean Activision Blizzard potentially doing M&A or a target for someone else?
No, Activision, well, the top publishers like Activision, like EA and Take-Two, they're always on the lookout for new games. And that's a major source of innovation coming from the indie studios. And in fact, during the pandemic, when working from home becomes more prevalent, you do see a much higher number of indie studio formations. And that's where the big new ideas come from.